And Davos, you were asking a question of President Trump, and he didn't quite answer the question, and he asked you a question. So the question he asked you was something like, why are you not banking certain groups? What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody. But the real question was about overregulation, frankly. And so as you look, what's happened is because the interpretations of AML, anti-money-laundering, BSA, Bank Secrecy Act, KYC, know your customer, know your customer's customer. There's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, and we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area that comes up in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity. Ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right. And I think it opens a dialogue about how to get these regulations correct. In the end of the day, we're open for everybody. We serve millions and millions of Americans, trillions of transactions a year, and we'll continue to do so. Okay,
so when this administration was elected, there was a lot of, I would say, jubilation in the streets of the banking world. People thought that the banking regulation had been too tough under President Biden, and some people thought that regulation would be more amenable to banks. Has that turned out to be the case yet, or is it still too early to know? And is the banking community happy with the direction that the current administration is going, or you just don't know yet?
Well, so you have to sort of step back and say, the regulation of banking has always been true since our charter, our oldest part of a bank was from 1784. So we've been regulated from that day forward. If you think about the great financial crisis and Dodd-Frank and a lot of capital rules and liquidity rules and all that stuff came in, there was a reason for the world writ large to be really not happy with banks. And non-banks that became banks, Goldman Sachs, Morgan Stanley, Merrill, et cetera. So you could understand that. When you go fast forward through the 15 years hence, plus you go through the pandemic and the banking system stands up and stabilizes the economy. You go through the regional banking crisis, the banking system steps up and stabilizes it, and they keep adding capital and liquidity. You're sort of saying, wait a second, we are a source of strength. And by the way, the American banking industry is really a source of strength. So the pendulum kept just swinging, even though the reason why it had swung had stopped. And so our industry was saying, wait a second, why are we have 20% more capital than we did during the pandemic? The risk is the same. It's just by mathematical creep of calculations. Why are you saying we're going to limit your fees charged for a certain activity or deem an activity a loan when it wasn't a loan? And with hundreds of years of history saying an overdraft is not a loan, somebody just says, I want to make it a loan. And so this idea of the regulators sort of imposing new rules and regulations that Congress did not intend, actually, was kind of an interesting question.